Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. Last week, the US dollar experienced a dramatic shift in momentum. In the first half of the week, the dollar stayed strong as escalating tensions in the Middle East boosted safe haven demand, while elevated oil prices continued to support the greenback. However, Friday's US February non-farm payroll report became the turning point. The unexpected contraction in employment significantly changed market expectations for Federal Reserve policy. WTI crude oil opened sharply higher on Monday, surging more than 20% and briefly breaking above the $100 per barrel level. Prices even touched $113, the highest level since July 2022. This disruption has prevented roughly 140 million barrels of crude from reaching the market, triggering aggressive buying for available supply. Analysts warn that if Gulf exports halt in the coming weeks, oil prices could surge toward $150 per barrel. Spot gold came under pressure in early Asian trading on March 9th, briefly falling near $5,014 per ounce. Although weaker US employment data kept hopes alive for future Fed rate cuts, the recent strength in the US dollar has been the main factor weighing on gold prices. In the short term, this stronger dollar is limiting gold's upside. That said, the longer-term bullish outlook for gold remains intact, especially if geopolitical risks continue to escalate. The yen extended its rally during Monday's Asian session, trading near the 157.8 level. The move was mainly supported by strong demand for the US dollar as geopolitical tensions continue to drive safe haven flows. The conflict involving Iran has now entered its second week with no clear resolution. On the Japanese side, labor cash earnings rose 3% year on year in January 2026, up from 2.5% in December, offering some positive signals for wage growth. Euro opened the new week with a bearish gap and slipped to fresh lows not seen since November 2025, trading around the 1.15 area during the Asian session. The broader fundamental backdrop suggests that the path of least resistance remains to the downside. Given Europe's heavy reliance on imported energy, higher oil and gas prices could pose a significant economic challenge for the region.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.